here we are. Nike Corp beat earnings. We're going to have to short the high end of the move. Closed at 81.62. Nike was able to pass on its cost because they have certain fixed rates. Preliminary number was $1.24 versus $1.16. Capital IQ consensus estimates. Revs for 5.8 billion versus 5.53 billion estimate. So on the conference call, we're going to find out here exactly what they did different this quarter and how they passed on that cost, because the last quarter we were short Nike. This time we were not, and Nike had a big problem. And they threw up some pretty good numbers. We're going to find out more about where the numbers came from, what the breakdown, U.S. Margins versus international margins, where Nike's expanded well over there in China everywhere. The thing about it is how they passed on the cost, and we'll do that on a different video. That's the knee-jerk reaction on Nike at the current moment. We'll get in with the numbers. They beat by 8 cents. Revenues rose 13.6% year to year to 5.77 billion versus the 5.3, as I said. Now, here's the thing: as ahead the end of the quarter, future orders for Nike brand athletic footwear and apparel scheduled for delivery from June through November 2011 totaled 10.3 billion. That's 15% higher than orders reported for the same period last year. Excluding currency changes, reported orders would have increased 12%. Okay? Now, what that means is that at the end of the quarter, people had bought up that inventory. And so we need to be very defined about why we just shorted it and came out of it for a profit, and the knee-jerk reaction on what these numbers are going to mean. And they were able to pass on the cost back to the retailer, who then had to pass it on to people like us, the consumer.